Hello everyone, this is Booksy. Today is Monday, November 6th. We're going to talk about AMC stock, do an update for the start of the week here, talk a little bit about last week, but I don't want to dwell too much on that because I want to get to what to maybe expect this week. It is earnings week, so we're going into a week that could potentially have some pretty tumultuous action, especially near the end of the week. Earnings, if I'm not mistaken, is an after hours earnings report on Wednesday is what it looks like, which is the 8th. Which means that a lot of the price action as a result of earnings would be on Thursday. Now, with that being said, we've got 3 full days of trading to go into earnings. So, as usual, nothing here is financial advice. I'm bringing this up just at the start because when you're going into a week like earnings, there's going to be a lot of estimations and ideas about what may happen. I don't particularly feel that anything's impossible, and I'm also kind of the opinion that we would have gone more sideways into earnings and then resulted, whatever the result is, would give us some kind of a price action pivot. That's not quite what happened on Friday, and therefore we kind of have to make adjustments. So, a couple things. So, number one, going into Friday, we had a gap to the upside, which was on Thursday, and that gap was not filled. It was never filled, and so Thursday into Friday, a bit weird. The big thing about Thursday was that after it pushed up, it found support again at 1026. And if you recall, 1026, that's the top area from the automatic reaction in this last range. So even though it dipped beneath that and went back into the range, it did not stay there long. My anticipation for this range was that we would form out more or less along this like 1016 area and chop here, which we've been resting on this particular creek that you see coming down. I called this a while back, and I haven't looked at this chart in a little bit, but I called this like the upper resistance creek because it was the creek that when we pushed up, that's the next high spot. So you can see we came down, we just tested it, moved right back up, and then just kind of held it. So unfortunately, maybe if you were looking for that kind of sideways action or even downward or sideways action going down this creek, you didn't get that. And I'm not saying that's a bad thing necessarily, but the issue with that is that we kind of rushed through this. I think this just looks like a basic M cross to me. So right now, this looks pretty solid. I can see this like I see anything else. You know, when we're climbing, you know, you want to see that kind of push and then that retest of a creek before you move. I think the bigger question that a lot of people are going to be asking is which way do we go first? Because we have a gap right now around 10. We have another gap down here around 920. And these guys are roughly 50% gaps up to this top. So if you look at where the gaps are, and we filled one on Friday at like 1053. So if you look at where they are, each one of these is like a 50% reduction going into 11. Now, why does that make me a little bit nervous? I think it's pretty straightforward. Typically, when you see stuff like that, you just kind of want to make a mental note of it because they're leaving gaps and like basically as they're moving like 50% up towards a particular target, especially if it's like a rising iteration, you might see that as a negative. I don't necessarily think it's negative. A lot of these ranges have been reaccumulations. A lot of them have maybe flashed bearish for a second and then gone back to being bullish. It's a mixed bag, is what I'm saying. A lot of folks are going to be really keen on that $13 gap fill. I don't know for a fact that that's going to happen. I do think this looks fine, you know, on the big picture as a possible SOS with a little backup to the creek. It did come above the top here. It didn't have that kind of massive sell-off. I mean, you look at the previous sell-off over here on like October 13th. That's more like the kind of thing you would see in a UT. You'd see a huge amount of volume going up and then a huge amount of volume come back down. You don't really see that. It was kind of a very methodical head and shoulder. So this to me just looks like right now a backup to the creek. So again, little M cross and then perhaps that bigger push to the upside. If you're looking at this as a sort of a, we could say S curve, you know, roughly 50%, maybe right around here where the M's are, maybe 1282. That's not quite the gap fill. That does kind of fall in line with some of the other lower targets we got. I know there's a lot of really high targets for these particular cup and handles. Honestly, I think if we get back above 11.17 today or tomorrow and we find support, we probably are going to see a pretty huge move going into earnings. And then I would not be holding through earnings if we were to see that move before. That's just me personally. We do have that gap down here around 10. Presently, this looks a little bit like a rising wedge. I'm going to say that with like a kind of like a grain of salt because, again, a rising wedge doesn't necessarily break down. We see them on AMC sometimes break to the upside, especially if it's in like a kind of a squeezing moment. A lot of times they might feint one direction and go the other. This kind of widened out, so it makes me think that there might be an effort to sort of erase the wedge action. We pushed over the top of it, and then we pushed down through the bottom. So we're basically flushing either way. The price target for that breakdown is basically the gap fill and maybe even slightly lower down into the 990s. So essentially what I'm looking at are as a bracket today. It's not that complicated. I know that on the lower time frames, RSI looks oversold. On upper time frames, it's a little different. It's not clear cut, that it's going to come down and fill the current gap that we see on open. So if it were to break down beneath roughly 1057, I think we could possibly see that lower gap fill and really come down and do what we were sort of expecting might happen going into earnings, which was that more sideways action in that lower range. This being more of a local act of distribution to try to get us to sell off. Is it very effective? Probably not. I mean, we caught here on the creek. There was support on Friday. It bounced up. If we can find support on top of like 1073, I think it's likely it's going to continue to go up. So we're just going to have to watch those levels. I would say 1073, sorry about that, 1073 and 1057 as breakdown levels. We're looking to the upside here. It's very simple. We need to find support somewhere, and then we need to come back up and get above 1117. We need to find support on 1117, and then I think we're free to go. And those are targets that are, in my opinion, are non-negotiable. Like, I don't think you want to go past 1117 without support. If you do just blaze past it, at least in the near future, it may not be immediately, but there's definitely a high probability you're going to come right back down to it in the near future, because this is the main breakout level. So you really want to find support on top of there. I've said 1073, and that has to do with this guy back here. You can see that as we're going above 1073, we're pushing back into this particular range that we left quite a while ago. Last time we even checked the top here was September 6th, and then of course we pressed up against it quite a bit back in mid-October, and now here we are again, kind of coursing across it. So the more we trade above it, in some ways, the better. I mean, it's more comfortable here. That's a good thing, but ultimately you really want to see it. That's why I have that drawn back down. I would prefer to see it find support on 1073 and then go out and find support on 1117 and then go. That to me would be a little bit stronger, and I think at that point you're in a really good shape to make that big gap fill to the upside. Until that happens, I'm a bit skeptical, of any kind of a rush move here. You can always chase, but just, have your stop losses in place if you're going to do that, just in case, you get that kind of nasty UT or something like that, that up thrust that then bleeds out. You want to be careful whenever you're doing stuff like that. So basically today is kind of like I hate to say it, but it's kind of like a reverse. It's like either or, right? It's kind of like you're going to go down low, get that stuff. Then that probably gives us an idea that, we may stay down here until earnings. But, in the event that does happen, I don't think it's the end of the world. I think there's a possibility that this is a catch right here on this kind of lower support. And that could still result in us having a pretty significant move after earnings. So I don't think it's the end of the world. if that happens. I don't think it's particularly bullish to come back down beneath 1030 at this point, or that 1026, but I'm not super worried about it. The way that this has been trading has been very consistently like these M crosses. We're checking things, and sometimes they're larger than you may expect. So there's that, right? And you can see like something like this is a bit out there. I mean, it's quite large, but perhaps at this point you look at this and you say, well, this could just be like a widening top. And I don't want to get too into like that kind of theory, but maybe as a way to kind of get the spread widened and then push over this particular top at 1080. We've done that before, so maybe it pulls back and then it pushes up to 12 something, comes back down, finds its support, and then it breaks out to the upside and you get that gap fill. I mean, there's all kinds of stuff that could happen here. I don't want to be like overly speculative about that at this time, but the biggest concern I have as a bull would be kind of going for these other gap fills. I think you don't really want to come down to 912, and I think at that point you're probably in a pretty major distribution. This looks like a cat ears to me, where you got 2 ears poking over the top. It looks like it. I still think you could read it like an SOS. The volume to me doesn't really look distributive just yet. I don't see any kind of major spikes in volume on these tops, especially this second top. It's just not there. It was like kind of a weak push up. I mean, it's average volume. It's not bad. Don't hear me wrong, but it's just not what you'd expect in like a distribution. So again, does this look like it could be some kind of a cat ear formation? Sure. Like I think you could argue it could be, and in which case this would just be like the tease for it. But again, if we find the supports that we need today, I don't see any reason why we can't go to the upside this week. So this is pretty much all I got for you right now. I don't have any other information. Maybe after today we have a little bit more. I can do another video. Obviously, we left some gaps down here that maybe just to tease out shorts. But there's certainly targets, and you want to keep them in mind for the future. So the lowest one being around that kind of 915 area, and then the 1016 area. So just keep that in mind as we kind of move forward. Right now, these creek crosses, they look pretty good. I don't see anything majorly wrong with it. I think the only major thing that caused me to raise my eyebrows Friday, was just that it came above 1117. It didn't hold support. An SOS with a backup certainly is possible. Could be just a larger SOS that's forming, We may even get like more of a, we could call it like a wedge here, before we go forward, right around the top. That's always possible with an SOS. You just have to find that support at 1117 before you take off. So all that being said, hope you guys have a good one. We'll talk to you later.